It's been 3 weeks since Bitcoin's put in a new all-time high price. We're seeing the grinding effect of a bored market. Now we're starting to see the stock markets roll over, potentially going through one of their largest declines in the last 6 months. Is this seasonal? Should we expect further downside on the markets? And of course, what does this mean to Bitcoin and cryptocurrencies throughout 2024 as we lead into the election, the big 4-year cycle? Hit that like and subscribe. We're your home of macro cycle analysis. We cover Bitcoin, cryptos, the stock markets, and of course the real estate cycle. Let's kick it off now with what's going on out there in the media. Wall Street sells off ahead of jobs report. Investors digest Fed's comment. We're seeing that across the board with the largest corrections in many, many weeks. And for the Dow Jones, this is now the largest correction in 6 months. So the October low came in. You can see back from mid-October to the bottom there, that was 5.5. We're now at 3.67. So largest correction we have seen. Now I'm going to go through this and the S&P and NASDAQ in just a moment to have a look at the key pivot point areas. But let's just finish off with the rest of the data here, the economic data. Looking at the interest rates, of course, as a reminder, we have been on the ball here with the interest rates, looking at there being less cuts than what the masses had hoped for, what the analysts had predicted. The beginning of the year, which is where this post came out, there was a cut every single meeting. A few days earlier, you had the cut going back to December as well. Now, of course, the opposite has panned out. There hasn't been cuts and it's remained on pause. But every time we see some sort of days down for the stock markets, well, the predictions change and you start to see a shift to the left to hope for more cuts. But if things remain relatively strong, as we'll show in the charts in just a moment, then I would expect that we wouldn't see as many cuts as what the market had predicted, which is essentially what's turning out. That just means that there's strength in the economy and there's strength in the stock markets, which is essentially where you and I are putting our money. Remember, we trade the charts. We don't trade the economy. Even when some areas seem like they're doing bad, we're trading the charts. And if the charts are going up and you're only a spot trader, well, then you're going to make money as the markets go up, not listening to the hopes of major corrections or recessions and all that sort of jazz. So in terms of the news that's coming up in the next 24 hours, you've got the non-farm payrolls coming up. Next week is the CPI data. These are volatile periods in the market, and sometimes the market tries to front run what they think is going to happen. If it doesn't occur, then you get a flip back in the price. At the moment, they're thinking the data is going to come out worse. And of course, we've seen the largest correction now since October. But of course, that's 6 months. Scroll out, take a zoom out here, zoom back. You can see that we are well into the all-time high territory, well above the old all-time highs. And in terms of corrections, as we've covered before, it's essentially the grind-up effect in this stage of the bull market. Now, if you look at the Dow Jones, the correction is 3.6%. Throughout 2022, it's put in much more significant corrections, which then begs the question, could we see a larger correction? Of course, anything's possible. I'm some guy on YouTube, but I'm just going to focus on the charts here and what we have seen now for essentially the last 6 months going back to the low, 12 months going back to the banking crisis low, and then 18 or so months going back to the October 2022 low out of that bear market. So we've had a lot of time to consolidate before we break out into new all-time highs. It's normal to see single-digit corrections, and if we look towards the forecast now for the seasonal patterns in an election year, what we've seen now with the sitting president running, excluding 2022, that would be the black line here, which of course COVID came in and gave a bit of a swing to the chart itself. So excluding that particular year, well then over this period of March, April, May into June, so the next couple of months could be sideways. There's going to be some swings in it, of course, basically turning into a trading range, but that's essentially what has happened every single presidential cycle year over this period. So we're starting to see the beginnings of that with this 3.6% correction. We take a look on the S&P, it's at 2.68, and the largest correction so far was 2.88. So for those key points in the market where we would look for some sort of overbalance now. So more selling than what we have seen previously in this entire move. We'd look forward to Monday, Tuesday of next week, because that would take us out to the same time frame as the previous move. And we would look for roughly the same amount of points, not percentage, but points to the downside as the previous move. So we've hit that now at 143, but the time is still shorter. So next week, we'll be able to figure out whether this is going to be an overbalance in time and price. And it also has to meet another criteria of breaking key support levels. So there's still a lot of support in the market, even though this can be one of the largest corrections in the last 6 months. Remember to always zoom out and then have an understanding of the stage of the season that we're in, and of course the stage of the cycle as well. We've had a very significant run up for the stock markets, and corrections are healthy provided they remain above key support levels. And what I'm explaining here is where those key support levels lie. If I saw this market come under 5,000, probably 49.50 to 5,000, that's going to be a little bit more worrying longer term. It doesn't mean the bull market is over. It just means that we may see the price remain underneath the current top for longer than if the price just drops back to roughly 5,050 to 51.50. So essentially, it's just assessing the strength and the weakness. In this zone, it's stronger. In this zone, it's weaker. Just means more time will occur to get back to the old all-time high. Whereas here, the old all-time high will be hit quicker than if it dropped back. Now, the area that it would have to fall to break this whole thing down, you get your major recession, depression, bull markets off, blow-off tops happened, the markets are in shambles. First area of support to break would be right through here. Looking at roughly 4,700 points, it's underneath the previous old all-time high, and it would be the key support level before the market took off. That's the first level. Then you would look back to the 50% levels. So let's take this from the top to the bottom, the major one here. Now somewhere back under 45 to 4,600 points. You can see how far away that is from the current price. And for it to get back there would be pretty significant double-digit losses. A long way from that point, but I just wanted to mention where those particular areas would be should you see the top in the market, and that's it. Game over, the show's over. Let's go home from this point. Right now, we're a long way from there, and we're still in the end stage of our 18.6-year real estate cycle. We're roughly here into the winner's curse phase, which is this last push up into the tops. This is for the real estate and the economy. The stock markets, maybe sooner. Usually they top in at a little bit later. So keep that in mind as we head up into the next couple of years. The other thing we're seeing is gold just have a bit of a day off here after 8 straight days up. You guys that are trading might be familiar with Gann's 7 to 10 bar rule. Now, over the last, again, 6 months, whenever we've seen these 7 to 10 bars in the same swing, so don't worry about your colors, your reds and your greens, the swings are far more important than a red day or a green day, because you can still have a higher high and a higher low on a red day, as you can see back here. You can see it through here as well. There's high, 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 low. Essentially, when you see these big, long, extended moves, typically there's some sort of correction. So for traders, this is fantastic. And what you can see here is we've got another one, 8 days straight up. Potentially, we might see some sort of average correction here of 2 to 4% from this price. If it was 2%, maybe somewhere down to about 2,200 points. If it's going to be 4%, maybe somewhere again down to 2,200 points. If we're looking at the 2%, maybe $2,270 down to about $2,220. So these things have come across every single time over the last 6 months. And although the market goes slightly higher, you typically see some sort of correction after these extended moves in the market, especially with gold in this case. So Bitcoin's met the first target. That's that swing bottom. It was able to close above that for yesterday's bar. Now the next level that it needs to get to is this top here, which is pretty close in line with the 69K level. That's 69,000, which it was rejected from. The top is at 69,700. So in a short-term time frame, that's the move that Bitcoin needs to do next. In terms of a percentage, you're looking at about 2 to 2.2%, and you want to see daily closes above that level to then get in tune to try to press to new fresh prices again. But Michael's got a great short-term analysis video on his channel. Link to that's in the video description to his channel there. Just looking at the possibility of a trap here. So basically a bull trap where we run up, test, and then come back under these levels. So that's still all in play because we don't have those closes above 69.7. I'm looking for this bar here, and of course 69. But in the short term, while Bitcoin remains above the swing bottom, it's in a space of strength, even if it is just the 4-hour chart. That leads us to the longer term timeframes for BTC, and we're currently in a red April. Now, there's still 26 days to go till the end of this month, and if you look at history, April has been a relatively good month for gains for Bitcoin over its entire history. However, there have been 3 times that there have been red months. You got 2 there, 22, 21, and also 2015. Could we get another red month? If we take out the data here for April this year, because we haven't finished April, well, then you get very good results. About 77% chance of a green month. But that's assuming that the chances are all equal and we don't take into account what's happened over the last 7 months. Bitcoin has seen 7 months of green. There's not been a time that we've seen 8 months of green. This could be the first chance that we see 8 months of green in a row, especially with such a good result here for April over the long term. But when you start to weigh in those probabilities of it hasn't happened before, it's quite an extended run to try to get your 8 straight green months, especially with the overall landscape also looking like it might come back for a bit of a pause here, especially with the seasonality. Then you start to throw the probabilities on the side of maybe it might just be a bit of a pause year. Because when you look back at 2021, this was the peak of the market, it's still a red month, but it really wasn't red by much, 1.76%. You had to wait till May before the market basically tanked, got its feet again, found its grounding, and then took off to that new fresh high that happened in November of 2021. So when we look at this, we got 7 green months in a row. We've got 1, 2, 3, 4, 5, 6 months within the swing in a row. The probabilities start to get stacked against the likelihood of more fresh prices to the upside. Hold your horses. This is fantastic news if we are to see some price consolidation at these levels. So one thing that I've come across a lot that is, I guess from some comments, is that comparing now to previous times in history, previous cycles, is not something people like to do, or at least new people expect fundamentals that have changed would mean that the markets now are all going to change. The charts are all going to change. And my simple answer to that is, so hopefully people don't get caught up in it, prices change. We're trading at 60 grand instead of 6,000 instead of 600. Fundamentals change. We've got ETFs now. We didn't have ETFs last time. We had the super cycle theory. We had other theories of Bitcoin going to 1 million. And the previous cycle, we had ICOs. And the previous cycle to that, Bitcoin was first getting discovered into these massive price discoveries. So prices change, fundamentals change, but human emotions never change. And what human emotions are the reactions to the market. Whenever we get super excited, no matter what the fundamental was, no matter what the price is, because it could be any particular crypto, you take your pick on the side here, they've all got different numbers. Human emotions never change. And that is something that we can rely on moving forward in the markets, because that's essentially how they've worked over the entire course of history. And the way that those human emotions are plotted are on the chart. So there's no guarantee that we're going to get an exact hit rate. We're going to be 100% right in the future, but we can rely, I think, the most on that humans will do the same things with the same emotions at similar times in the cycle forever and ever and ever. Now, that's a theory I take into the markets. Some will disagree and they'll say things will change, and they'll say human emotions will react differently to certain things. And of course, everyone has their own beliefs and own ways of trading the market, which is what makes the market so interesting to continue to study as a lifelong endeavor, which is what I've chosen to do. So if you see it differently, that's great. We'll see how it all pans out at the end of the day. And hopefully you make coin and I make coin and we all live happily ever after. So there's my rant about fundamentals and how the markets can essentially remain relatively the same or move relatively similarly. And we can review the past to forecast to some degree the future. If you choose otherwise, that's cool too. Let's move on with having a look at some of these areas in terms of the 2012 cycle into 2013, and of course the following cycle into the peak of 2017. Now at these lows here, the market found a peak in August, and then we found that next peak in April. So we're kind of in that similar time frame now. We got a peak in March so far. We haven't seen a higher high. The point of this part is once we broke through into new all-time high territories, there was about 9 months left. And I'll show you the other data through into the peaks in the next ones. However, the consolidating periods are the most important time at this stage, especially for cryptocurrencies, as I'll show you in just a moment. Now we found that peak, and the market essentially went sideways. It got boring. The retail market lost interest, and we see that on the exchange volume as well. Essentially, there's been less trading happening on the exchanges, and you need to see more of that come into the market to get these big blow-off moves, especially for the retail coins, which would be your altcoins here. You're not seeing institutions and all sorts of hedge funds and whatever, ETFs getting created for altcoins. You are just seeing degenerate gamblers, some great traders making bank from the markets heading up whenever there is a lot of volume in there, to the upside or to the downside. So this here, if we do go into a longer consolidation zone after significant moves to the upside, 1, 2, 3, 4, 5, 6 green big bars here to the peak, then there was about 5 months before it broke out on the 6th month here of consolidation. It's just an idea. Doesn't need to be 5 months. It could be a couple of months like we've seen already in this cycle. For Bitcoin in 2023, we've already seen a 7-month consolidation period, but to the downside, it was essentially 60 days and another 60 days, and then it took off from there. We've been green for the last 7 months and 6 months within this swing of pretty significant upside moves. So these periods in the market that I think that we're potentially entering now, whether it's 1 month, 2 months, 6 months, this is where the consolidation happens. It's boring, there's loss of interest, but then what follows is that fast pump, late buyers returning, and they miss out. It happened twice in the 2012-2013 run. It happened twice in the 2015 to 2017 run, and you could argue that it happened again at the accumulation bottom. In the 2021 run, you had it at the low. This was very, very quiet here in 2019. You had a similar-ish period through here without the COVID drop. This was very quiet. This also was quite quiet around the halving, and then it took off. Again, another quiet period as everyone got wiped out in May 2021, and then we had that final run up, which leads us to now. We've had a couple of quiet periods. After that June drop, it basically got rid of most people. There's still a bit of noise here, but once FTX came in, basically the noise left, and it was very quiet through December until we got that pump up in January. It went quiet again through the periods of May into June, July, August, into that low of September. And then we're seeing an explosive move from that point. So I wouldn't be surprised to see something like that happen again, even if it goes slightly higher or we take out the low of March. To me, it's not the end of the world because the cycle is still well in play. And a consolidation like this, like we've seen over the time, 6 bars here, 5 bars here, another 4 to 5 here, 4 to 5 here. That 4 to 6 month period results in extremely explosive moves. You just have to look back to 2023 to see that sideways move kept everyone out, and you get these extremely explosive moves to the upside. Now, this is the crypto total currency market cap, excluding the top 10 in dominance. So we're just looking at percentages here. This chart does not have to go up forever. You could get the top 10 taking more dominance over the entire market in the future, which would then cause this to go down. So that is a disclaimer here. However, from what we've seen in the past so far, maybe this is one of the final cycles that we do see it head up. You've got a Bitcoin all-time high, Bitcoin all-time high, Bitcoin all-time high. Now, after that period, explosive move, down to a little further down, explosive move. Maybe we see a little further down. So this is all those cryptocurrencies that might have more cooling off to do. Maybe we also see another explosive move to the upside. This, to me, is still in play. We're still above very key support levels. The only thing right now is that we're finding ourselves hit a resistance level twice now, maybe even 3 times if you want to include April. So maybe we do get a bit of a pullback here before a breakout and the explosive move can start. Of course, this is all just my theory, my analysis, especially if we were to see a cool off here in April and then potentially into May. But I think that just builds a better foundation for that next explosive move. And the longer we're here, provided we hold up, the better that next move to the upside is going to be. Now, I've got a couple more to show you here. ETH BTC is actually on the breakdown. So you might recall a couple of months ago, I was looking at this potentially being a consolidation to break out. It did not get there. It failed. This was the level we had on the chart. We're looking at 6 million Satoshis. It did not break the 6 million Satoshis. Therefore, it had to go the other way. That's just how the analysis works. But should this hold up? There's a lot of buts in this one. If it holds up, it could be similar to what we saw in the previous cycle. You got the new Bitcoin all-time high. ETH BTC went lower here. So Bitcoin was still holding out. Bitcoin held its ground, then broke to new highs. But that put pressure on ETH BTC, which then finally had a turnaround, and then it took the spotlight. Overall, this is just my thoughts looking forward to the ETH ecosystem and whether Solana takes over and all that sort of stuff, if you care to know. If ETH is unable to break past this resistance in this cycle, that might be a significant call that the ETH ecosystem is not going to outperform in the future. Some may have already come to that decision on their own. The chart would tell me in the future. This is a macro outlook now. This won't be decided, I would say, for at least the next couple of years. So as I said, some might have already decided that and say, well, Solana, forget ETH. There's going to be something new after this. Okay, I just want to look at the facts from the charts. As I said, if this breaks down and is not able to get back above that key 50% level, then the ETH ecosystem's probably not going to be the great thing, the thing that takes the market to the next stage in the coming cycles. Just keep that in the back of your mind and watch this chart here moving forward into this next stage of the cycle. Even though I'm very bullish on altcoins that they're going to pump and break into new fresh highs come this next push, this is really going to play a big part on whether that ETH ecosystem is going to make it come, I guess, later in this cycle and potentially that next cycle as well. Nonetheless, this is where we sit. USD low, bottoms have formed, new Bitcoin all-time high, another fresh break to the downside for ETH has happened before already. And what comes after that is a nice push to the upside for Ethereum. So I don't think it's all bad news for the rest of this cycle, but I'm just keeping some key resistance levels in mind for the ETH BTC chart to help me understand the ecosystems moving forward from a macro perspective, not the day-to-day or week-to-week, but from the months and years ahead to see who is winning this race, factually speaking, from the chart, not necessarily the fundamentals or the subjectivity about who's what, fees this and that and the other. All right, that's the video today. Thanks again, guys. I'll see you at the next one for this everything bubble that is popping off. Until then, take care and peace out.